Welcome to the Deep Dive. Today, we're really getting into the Tesla story as it stands in early 2025.
Yeah, and the headline number that jumps out is that stock price, isn't it?
It really is. A 36% drop year to date. Now, okay, it's not just Tesla.
Right, the whole Magnificent Seven, those big tech stocks, they've all had a rough start to the year. Negative returns pretty much across the board.
True, but, 36% for the EV leader. It does make you ask, are these rumblings about brand trouble actually serious?
Yeah, is it something specific to Tesla pulling them down more?
Exactly. So our mission today for you listening is to cut through the noise and figure out if these brand concerns really hold water. We're not just looking at the stock chart.
No, we're digging into a specific source, a recent Motley Fool article. It looked really closely at Tesla's first quarter earnings call from April 2025.
And the interesting thing, the hook maybe, is that the article suggests, despite all the negative buzz, there might be like 3 specific words from that call.
Oh, okay.
That could actually ease some of those worries about the brand. Something to think about.
Okay, so let's unpack that. The 36% drop. Within the context of the Mag 7, it still stands out.
Mm-hmm.
Suggests maybe there are company-specific things going on.
Right, beyond just a general market downturn for tech. And the fact that the Motley Fool article zeroes in on the brand as a potential issue is telling.
It suggests the headwinds might be more than just, economic factors or interest rates or something. It could be about perception.
Precisely. And the article starts off by reminding us just how, powerful the Tesla brand actually is, or has become.
Yeah, they mention names like Apple, Coke, McDonald's, Nike, these huge globally recognized brands.
Right, where you see the logo, you instantly know the product. The author argues maybe Tesla isn't quite there in the overall car market yet, but within the electric vehicle world, they're kind of the default, aren't they? That immediate recognition is, incredibly valuable.
Absolutely. That's brand equity right there. For listeners, that just means all the positive feelings and value people associate with a brand, making them choose it.
And Tesla built that equity in a really unique way.
Yeah, that built-in advantage is huge. And it's fascinating how much of it seems tied, according to the article anyway, to its CEO.
Oh, definitely. Elon Musk. The article calls him a unique marketing asset. Hard to argue, really.
His social media presence is just enormous. A single tweet can go global instantly. Most companies would kill for that kind of reach.
Totally. So unlike, say, Ford or GM with traditional ad campaigns, Tesla's brand feels heavily tied to Musk's personal platform.
Which gives them amazing reach, like you said, but it also puts a lot of reputational eggs in one basket, doesn't it?
That's the perfect way to put it. It's the double-edged sword the article talks about. That powerful tool can become a pretty big liability.
And that seems to be where these current brand concerns are really coming from.
Right. So the Motley Fool piece gets specific. It mentions Musk becoming a major financial supporter for Donald Trump during the 2024 election.
And then after Trump won in November 24, he appointed Musk to lead this new department.
The Department of Government Efficiency, DOGE. You got to admit, the acronym is memorable.
It certainly is.
Yeah.
And the mission itself, cutting wasteful federal spending, might sound reasonable to many people.
Sure, on paper. But the article highlights how Musk tackled it. Very public. Constant social media updates.
Yeah, it wasn't just behind-the-scenes work. It was like daily announcements almost.
Announcing contract cancellations, explaining why, highlighting the savings, all out there on social media.
And, perhaps predictably, this very high-profile government role started to generate some friction, some pushback.
The article calls it natural blowback, and it connects this directly to political activism. It even mentions protests specifically targeting Tesla dealerships.
Wow. Okay, so it wasn't just online chatter. It moved into the real world.
Seems so. And the worry for investors, laid out in the article, is pretty straightforward. Are people going to start avoiding Tesla cars because they don't want to be associated with Musk's political role?
Regardless of what they think about the actual vehicles themselves.
Exactly. It wasn't just about his political views, but the very visible, and you could argue maybe divisive, way he was carrying out that government job.
So the core concern becomes, will this political stuff start to actually hurt sales numbers? Hurt Tesla's growth?
Which is a huge deal for a company built on the idea of rapid expansion and disruption.
Okay, so that paints a picture of, potential brand damage.
Definitely sets up the problem.
But as we hinted, the article doesn't just leave it there. It offers a different angle, a counter-narrative.
Right, it raises this big question about brand resilience when the leader is so prominent, maybe even polarizing.
And then, bam, it brings us back to those 3 key words from the earnings call.
Ah, yes, the potential good news. Exactly. Just when things look shaky for the brand, the Motley Fool piece highlights something from Tesla's Q1 earnings call. An executive apparently stated they saw a record number of test drives globally in Q1.
A record number. Interesting.
And then Musk himself reportedly followed up saying something like, as far as absent macro issues, we don't see any reduction in demand.
Okay, so record test drives and Musk saying demand is holding up, barring wider economic problems.
And those 3 words the author focuses on are interest remains high.
Right, so the interpretation is despite the political noise, despite the protests, despite the negative press, people are still actively checking out the cars.
A lot of people, apparently. Record numbers globally.
And if interest does remain high, maybe those brand anxieties are a bit overblown, or at least not translating into a collapse in potential customers.
It's a really critical point. I mean, test drives are a pretty solid indicator, aren't they? People taking the time to actually go and drive the car. That usually signals real intent.
It does. It suggests that maybe the product itself, the car, the tech, the performance, just the desirability of owning a Tesla might be powerful enough for many people to overlook the other stuff.
The noise around the CEO.
Yeah. Or at least it's not a deal breaker for enough people to cause a demand drop, according to that call.
But hang on, that disconnect is fascinating, though, isn't it? All this negative attention, the political blowback, but record test drives, what does that tell you?
Well, it could imply that for a significant chunk of the market, the product's appeal is just really, really strong. Maybe the innovation, the EV leadership, it outweighs the political associations for them.
So maybe what drives consumers in this specific, rapidly changing market is different. Less about the CEO's persona, more about the groundbreaking tech.
Possibly. It suggests maybe companies built on genuine innovation, especially in new sectors, might have a certain resilience to these kinds of brand fluctuations tied to a leader. The product speaks for itself, perhaps.
And it seems Tesla or Musk might be subtly acknowledging the potential issue, too.
How so?
The article notes that Musk indicated he'd be scaling back his time commitment at DOGE.
Ah, okay. Pulling back from that very public government role.
Yeah. Which, you could see that as a move to maybe lower his political profile a bit, let the focus shift back more towards Tesla itself.
That makes sense. Less time in the political spotlight, potentially less controversy spilling over onto the company brand.
So where does all this leave us, then? The Motley Fool author seems, I'd say, cautiously optimistic about Tesla's longer-term future.
Right. Not just because of the interest remains high comment, but also looking at the bigger picture. Demand for electric vehicles generally is still strong, right? The overall market is growing.
That's a crucial piece of context. Tesla isn't operating in a shrinking market.
Exactly. And the article also touches on other parts of Tesla's business. It's not just about the cars anymore.
I mean, the AI stuff.
Yeah, they're AI-powered products, services. That's expected to scale up more in the coming years. That diversification could be really important.
So adding another layer beyond just vehicle manufacturing.
Which, for investors who can handle the ups and downs, the volatility,
Yeah.
it might make the stock look like a decent opportunity, despite the recent dip in the brand questions.
Okay, so let's try and crystallize the key takeaway for you, the listener. It seems like, yes, Tesla's brand definitely faced some heat in early 2025. A lot of that seems linked to the CEO's high-profile political role.
Increased scrutiny for sure.
But crucially, the company reported those record test drives in Q1 and maintained that underlying demand wasn't really falling off.
Suggesting that the core interest in the vehicles themselves seems to be holding strong. Despite all the brand-related chatter, interest remains high, basically.
Right. Which leads us to a final thought, something for you to chew on.
Okay.
Given what we've discussed, how do you weigh the influence of a leader's public image, their political activities, against just the fundamental demand for a company's products?
Especially in a market like EVs that's changing so fast. Does groundbreaking innovation ultimately trump brand perception tied to a personality?
What does this episode tell us, maybe, about the long-term resilience of innovation versus the sometimes fickle nature of public opinion and brand image? Something to think about.